All right, we are live. What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. If you're not, welcome back. Today, we're going to be talking about what's going on with the stock market. Three other times in the past century has the S&P 500 achieved back-to-back gains exceeding 20%. We're in that situation right now. Expect volatility to come. I like looking at this chart. I like zooming out. And I like when you zoom out because everyone knows, everyone's aware, or everyone thinks when they invest in the stock market that they're looking at roughly 9-10% gains yearly. If you look back and you look at the last, since the S&P 500 was actually introduced in 1957, the S&P has gained about 10.5% annually. So that gain has actually been rising over the past few years. The S&P's annual average return in 2023 was 26.3%. That was, remember, we had minus 18% in 2002. Returns obviously often fluctuate. And if you're preparing for retirement and if you're saving for retirement, a lost decade is not something you want to be unprepared for. And it's happened many times. Many people think of what happened in Japan in the 1980s. But look over here, you're looking, remember the dot-com bubble? And then it burst. S&P took 14 years to recover to new all-time high. We're looking about 10 years on the NASDAQ. A lost decade for many people that sets back their investment goals on an absolutely massive scale. You can't be caught unprepared. A lot of retailers are already unprepared. We'll look at that in 1 second. Going the wrong way, though, as we continue to see 2 years in a row, 20% upon 20% gains. Back in the 1970s, we had a similar situation. And you can see it's not uncommon at all to see markets correct. We call it running sideways. When markets are in correction before they're able to make new all-time highs, we do it in relation to our own P&L. And then you have these other times when you're seeing these absolute crushing melt-ups occur in the market. If you look back and you look at these periods where we had S&P up 20% for 2 years in a row, we had in 1927 and 1928, it was followed by some really strong back-to-back corrections, the Great Depression. You look at 1935, 1936, look at these massive gains, 42%, 28%, 40% correction, followed by volatility. Volatility is great if you know how to read it and you know how to be on the right side. What we're doing today is going to have ramifications, not only here for our thought process, for our mindset, for what takes place in the year and years ahead, but also for how we navigate this current cycle. Not only that's related to equities here, but specifically to crypto. A lot of people are lining up alt season. It looks like this alt season hasn't even begun yet. It's just barely even getting started. A lot of people think it's going to be ending very soon. We talked about how right now one of the greatest risks for people could be becoming short Bitcoin. Short Bitcoin is not just actually shorting Bitcoin on an exchange using a derivative product. It's also not owning Bitcoin. And could you imagine a lot of people expecting a top, and maybe the top will come. And that's what we're going to look at today. We're going to look at how we could recognize tops and bottoms. And we're going to go ahead and we're going to take that skill and we're going to try to hone in on it and craft it so that if we see any type of technical breakdown, reason to get cautious, equity markets, Bitcoin, crypto, we'll be all over it. We just don't want to get comfortable. We want to continue honing our craft. If you are enjoying being here today, if you get anything of value out of today's session, please go ahead and smash that like button. Let's get into it further. We saw in 1995, look, another 45% gain. Can you imagine in 1 year, 45% gain, 42% gain? It makes me feel like the last 2 years, these 24% gains is almost nothing. Wow. And then can you imagine 45 followed by 26% gain? 1995 and 1996. Look at this sharp acceleration. That's a melt up. Prices come too far, too quickly. And then all of a sudden, boom, throughout the rest of the decade into the dot-com bubble. Wow. Sorry. Yeah, 95, 96. I saw someone hit a thumbs down. I was like, oh, do I have the wrong year? Because you can't read the years at the bottom. But no, my awareness is completely on point. We're talking about data. If you don't like data, there's nothing I can do about that. We're learning how to not only read data, but interpret data and position around it. All right, so let's take a look and continue over here. That's not the only times you saw in 95, 96 what followed up. Maybe this is what the thumbs down comes from. 97 and 98, they were actually off years. Well, I don't know what I was talking about. Good luck. 3% minus 14%. And then what's going on here? Could anyone help me out? What are we looking at? 2023, 2024. I was reading it backwards. I was going to say, how do they already know what the returns are in 2025 and 2026? That's absolutely ridiculous. You can't do that. Those were the returns in 1997 and 1998, followed by the 34% increase and a 28% increase. I got that wrong. This was in 1954, 1955. You got to learn how to read the data, Jordan. You can't interpret the data if you don't have it correct. That's a little bit of fun. And guess what? There's nothing easy about any of this at any time. Don't take yourself too seriously. Have fun. Stay strong. Stay on the right side. So beautiful. After that 34 and 20% increase, in 2 years, a 50% increase, which is exactly what we've just experienced right now. It was followed by another 50% increase in the next 2 years. There's no interpretation about after having 2 years of outsized gains, 20% plus gains on S&P 500 back to back, what happens in the following 2 years. But you could be assured that volatility begets volatility, and there's going to be volatility ahead. Let's make sure that we do our best to stay on the right side of the market. This brings up something into my mind. If anyone here is able to look at this full chart, or from right here to where we are in present, and if anyone here is able to go ahead and put out a severe caution in the comments that I'm thinking, that I've seen on other charts, that I will present to you in the days or weeks ahead, but I don't want to talk about that right now. I'm just going to call that the elephant in the room, and we're going to have to talk about it eventually. We're going to have to figure it out. Right now, though, let's continue. Right now, we're looking at buy-side positioning in U.S. equity futures hitting near all times yet again. And you can see during this rise, that's just completely continued to accelerate. They're not wrong, though. If you look at where and how they were positioned in July of 2022 off of the bottom, they were completely on the right side and did a fantastic job at getting the turn. So the caution might come when this positioning not is running at new all-time highs, when it starts moving the other way. If you were to see a breakdown, hey, could you draw a trend line on equity futures positioning? I think you can. And if you have, it would have worked every other time as well. What about if you looked at what happened, or I'm looking at what happened in the fourth quarter of 2018, equity markets were under a pretty strong correction, trying to look at the position, and it was going in the right way. And then they got on the right side really quickly. And then you could see coming into the lockdown, the positioning is pretty strong here by institutional investors. Something to take note of and watch. You're looking at professional managers, same thing, positioned at the extremes. Same thing, their positioning looks to be correct at the right time. Not so much for retail, though. JP Morgan says retail traders are struggling. The average retail investor is up 3.7% year to date. This is horrific. This is a travesty. Despite the is that possible? We live in our world. We live in our bubble. So I can't imagine how that is possible. By comparison, the S&P is up almost 25% on track for its best election in 88 years. The market's retail's worst annual performance for any year. This is like being short Bitcoin is one thing. Being short equity markets is another when you're experiencing the devaluation of the underlying currency. This is how people really go from a bad situation into a worse one. Knowing when to be on the right side in the market and on what side is absolutely priceless. Tomorrow, we're going to be actually talking a lot about alts. We're going to be picking up our alt sessions. So tomorrow, C-Slack, join us, bring it back up. We'll get into the discussion. I want to continue over here and keep the momentum. We're looking at stock market correction concentration hit a record high this month, right? So we know the Magnificent Seven. We know that, hey, today Apple probably on buybacks, probably not iPhone sales, once again hitting new all-time highs. And if you look deeper into that concentration, you see, well, it's been the highest it's been actually in 60 years. And you have to wonder, was it high or overly high during the dot-com bubble? Not really. And back then, it was a bubble for a good reason. Everyone that was around remembers pets.com and the valuation it was given. However, when you look at the earnings backdrop and you look at where the earnings rustle under pressure today, with good reason, seems to me that there's a good reason that we're seeing the concentration and weighting of the S&P 500 as it is right now. Does that mean that we can't see any type of strong correction at any moment? No, it does not. If you remember this chart, back in 2022, the end of 2022, if you remember the sentiment, it was extraordinarily bearish everywhere. And then if you remember here, we closed our eyes. We said that's an absolute buy impulse, trendline break, close your eyes. And then even in this area here, the sentiment was extraordinarily bearish. I put this out over here. I inverted that chart and I put out this little chart without showing that it was the NASDAQ. No one knew it was the NASDAQ when I presented it. And I said, it's still bullish, which means that it's bearish. It's inverted. If the purple breaks, this could really roll. The first sell impulse should have been respected. The first sell impulse was this, the line we just looked at. If you want to technically be on the right side of the market, regardless, I threw this in here because everyone was so extraordinarily bearish. Regardless of how you view the macro, follow the technicals. And then you could see, obviously, wow, did it roll? The sharp acceleration, which has continued, obviously, till now. And then I'm reminded of this. And I'm looking at this chart because I haven't seen this chart since it was produced somewhere around this time, somewhere around the first quarter of 2023. And what I did was I drew a Wyckoff distribution and I inverted the chart. And I didn't know if that works. I didn't know if it's possible to actually do that, because this is for a market top, not a market bottom. But I wanted to see it. I wanted to play with it in real time and see what happened. And looking back in hindsight, you can say, well, that was fire. That same concept, just in reverse, beautiful stuff. And then I wanted to play with it a little longer. So the first thing I did was, well, I want to have the awareness that we had at that market bottom right now. If you ask me what's going to happen in the next year or two, my instinct, my belief is that we are going to actually melt up. That this is much more 1995 and 96, and we're headed into 1997 and 1998. That's what I believe. That doesn't make it right. I don't know that that's going to be right or not. I want to make sure that I'm on the right side. So let me go ahead and just make sure that I check my awareness. All I'm doing is cloning that line. I'm just playing around, and I just started a trend line off of over here. And then I clone it, and I could say, okay, Well, that's structure. Let's keep with it. Let's keep playing. Going off of these two lines, and I could see that, okay, that's structure. And then this one kind of confirmed it off of the last two touches. So that's pretty neat. We got some structure over here. Are we seeing any type of Wyckoff distribution? You have to go ahead and invert this now in order to see what I'm talking about. So let me go ahead and do that. Let me invert that and just come back down. And so same premise over here. And so is this? Then do we have this? If we we got to take out the high here in order to get the LPSY in. Well, Jordan, we did take out the high. We did take out the high. Yeah. So from my structural view, we got to take a peek above there for me to be thinking I'm taking out the high, but that could be very wrong. If I go like traditional TradFi and use horizontal, and we took it out. So, but wait a second. This is not horizontal we're looking at. This is TradFi horizontal. And this wasn't horizontal. That was sloping trend lines, and that was bang on. So I would say that we have not put in the LPSY yet. Watch for it if we do, and we'll watch whether or not then we accelerate. Because if we're accelerating off of that, then what I would expect is something like this. Right? So this is like a similar situation right over here, like a similar pattern. And then you could see like if that was the LPSY inverted and then you came back down, like when you break down over here, you should see acceleration. So if we break down over here and we come back in, that's going to put us on caution. My expectations are the next year is going to be bonkers. Even the next 2 years maybe. But I don't know that's going to happen. If I'm looking for the earliest potential sign of a stock market breakdown, this I'm going to watch to see if we break above here and then don't hold. I want to see us break down and then shoot with aggressive aggression. All right, so those are two things that I'm watching for. Right, we'll leave it right there. That's enough. Let me go ahead and invert this back though. Get back into real time with you. And by the way, the confirmation for that, like this was the confirmation. The confirmation would be a break of this line over here, down over here. If that were to occur, if that did happen, and that's not my expectation. If that were to occur, and if that does occur, then are we targeting like back down into this business? Oh, yeah. I mean, 13,000 would probably be the first area that I would be looking to target in that area. I'll also say between 14,200 and 13,000. I think that's well in play. That's enough right now. What about this chart? China has been absolutely getting rocked. And when I look at this chart, it reminds me maybe U.S. equities are the coolest kid in town for a reason. They got fantastic earnings. Every reason to be investing in the U.S. But look at China, and ever since Ray Dalio tried to sell you China, it's been absolutely getting demolished. And then you can see where we are right. This chart over here reminds me a lot of this chart right here. And this chart right here reminds you of the Wall Street cheat sheet. Or at least it should. It reminds me of it. It's textbook. If you're not familiar with the Wall Street cheat sheet, then just go ahead and search it and look at an image. And it looks exactly like what we just looked at happening in China. Look at this situation that we're in, disbelief. They're tracking very closely. That's not why I want to look at this. I want to look at this because I want to make sure that we are able to do our best at recognizing any structural breakdowns that occur. Bitcoin right now is trading $95,700. A lot of people's expectations are that in the next quarter, Bitcoin is going to top. next quarter into April, Bitcoin is going to, that's not my expectation at all. I don't need, not even close. However, let's make sure that we are aware. Maybe we have a mid-cycle dip. If we're going to see Bitcoin, if you remember Bitcoin correcting after it broke 50K and down to 30K, we were on side, but that's a long time to be off sides. We want to make sure that we are taking nothing for granted and extremely sharp going forward. Let's just have a little bit of fun for a second over here. And let me go ahead, and first thing I'm doing is connecting off the bottom over here, right? I'm trying to get off the bottom here, but I'm going to cheat and coming up over here. All right. And the first, I'm trying to go off these two. You can see that definitely over here. Again, there's another touch and another touch. Interesting that this is where we ran into upward resistance. So I was trying to say, hey, well, I wonder if we were to see any type of price acceleration, which I also do not expect on Bitcoin. I suppose it could happen if we were, this is blow off top. It's not, I don't think at this portion under S-curve adoption that we're going to see a blow off top. If it were to happen, what could cause it would be maybe the US taking a strategic Bitcoin reserve and then increasing it from 1 million to 2 million, 3 million, 4 million position. And then we see Brazil, who just proposed the bill, and then G7. And yeah, that could be a lot of buying of Bitcoin. And maybe that's something that could cause some type of what does Samson Mao call it? The Omega candle, could we see Bitcoin going up $10,000 a day until it hits $1 million? Who knows? Maybe something like that could happen. If something like that were happening, I wonder, we'll go back later to other blow off tops on Bitcoin. Not today, another time, and we'll see whether or not there's anything there. But what is here is I'm going to come in, just jump over, and how do you find that top, right? So I'm attracted here to these two over here. I'm just going to go like that. And then what's interesting is that I don't have it exact, huh? Let me make it exact. All right, that's exact. That's exact. And look, Wall Street cheat sheet is all about emotions. I'm going to get rid of this line now. If you're in this position and you're looking to exit, and let's say that you're holding ARK, all right? It could be any asset, doesn't really matter. And price goes from $130, you're counting your money, your unrealized gains, and it has a 20% move over here, and then all of a sudden it gives back those gains. You're I'm tracking ARK, not from wherever I entered. I'm tracking it from when I had the most unrealized gains. I just gave back a bunch, but I had plans for that money. So that's a technical breakdown. You should exit the trade, but most people hold, and they hold because they want to get back to where they were. Price accelerates down, and then, okay, things are returning to normal. I'm almost to where I should have exited, but things are going to actually take out that high again, and then it's going up, and the Wall Street cheat sheet plays out over and over and over again. This is the earliest that I could think of an exit. Now, I could go ahead and I could say, well, what about this? This is for sure structure, right? And if I'm going to come over here and I'm looking where price was climbing here, there's a breakdown there. But if I were doing that, I would have exited also maybe off of here. Hold on one second. Let me zoom in a little. Look how that line plays out perfectly. So that means I would have had to exit here, find a place to re-enter. I would have been exiting here, finding a place to re-enter, and exiting here. That doesn't work. And that would have been happening the whole way over here. That's not the earliest I could have exited. The earliest real technical breakdown that occurred over here, if you were actually seeing some type of aggressive price action like that, would definitely be over here. And then you could see, like, again, going back and forth, and that's not the episode for it. It's actually the best way to do it, but I'm not going to do it now. But I'm just looking around, I'm seeing, okay, that structure definitely persists throughout. And that's a really good place to actually be adding further short side sales over here, right? You can see it happening again and again and again. Now, since for those that are watching and want to know what I'm talking about, because I'm not going to do it right now, and then that means I'm probably going to do it. What you really would want to be doing would be like something like this. Probably just the inverse angle, the degree of this one over here. Probably just the inverse. And let's say that I was trying to check. So I go short here, right? This is where, well, I'm short from up there. So, sorry. Let's get this right. First short position occurs, exit and short over here. I then take this line up, right? And this line would be the next place that I entered long. I'm going to stay on the right side over here. After I enter long, I line it up again. So I entered long here. This is short, right? Now I come back in here. I throw it over here. I'm back long over here, but I'm just treading water. I'm not having any breakout or breakdown. I'm treading water. After I go long, I put that in over here. I'm back short, right? Stay with me. Put it back long, right over here. And then again, stay on the right side. Short, you can see I'm just treading water, right? Short position. That holds over here. That made back some of the treading water I made in, but it doesn't go anywhere. I'm long here into here. This is sideways price action for months, and this is how you navigate it. And then here's the short. Once I'm short over there, money shot. All the way to down over here, money shot. So again, I said I wasn't going to get into it, and I'm not getting into it, but for those that want to know, that is the best and the goods. But that's for another day here at CTM. If you remember this, we were looking at back in January 2023, we were looking at what underbellies looked like. We were saying, oh, I wonder if the market's bottoming. Every other time we've had an underbelly breakdown, it's been a massive bottom signal. And then most people thought we were just going to bounce, take out the low again. Sure enough, it was a very, very good signal. So I'm wondering, well, are we able to go ahead as we were just looking at the Wyckoff distribution pattern, which was actually an accumulation pattern when inverted? Are we able to do the same when we're looking at finding the top? And then I'm going to revert back and I'm going to say actually the work that we were just presenting in the beginning over here on ARC is likely the way to look about the top if we're going to see any big technical breakdown in crypto. But it's all like just a learning process, putting it all together. So you go down a million tangents, a million rabbit holes, and then most of them go nowhere. But that's part of the exercise. That's part of what needs to be done in order to get to where you are. So I'm going to keep this chart up over here because I'm really worried about why I don't think we're seeing a top coming in the equity markets, why I don't think that alt season has even begun. And by the way, we'll talk about alt season tomorrow, and we'll talk about when it really gets going. And we're not even anywhere close to that at this particular moment. But we also want to make sure that we're protected when we see any type of breakdowns. Bitcoin's known for having many 20, 30% corrections, even when the bull of all bulls is really running, even if we were in a banana zone. And if that's happening, alts really get punished during that period. We want to make sure that we stay all over it and on the right side. NVIDIA, let me just check in like with the fresh eye. Where, like, could we find where NVIDIA might be breaking down again? If you've been following, I don't have the capacity to get into it right now, but if you've been following this whole time, we had the breakdown over here, the red line before the breakdown. We came in as price was over here. We put in the horizontal line and we said, we don't use horizontal, but we're into horizontal support. It then has bounced since, but it hasn't made any repair. It looks like that's like a bear flag getting ready, and that could roll over. So I'd be watching this. I mean, it has to, for a repair, we got to get above that red line, really. So it looks pretty weak to me, but nevertheless, if it keeps going, it's always during the tensions. You never know what's going to happen. So I'm watching this for a further breakdown after the bounce off support. Dollar here came into our early aggressive line sell impulse. Remember, this is where we took the long. Most people, obviously, as the Fed began cutting, were expecting the dollar just to get demolished. Now we're talking potential milkshake theory. If the dollar breaks down this sell impulse, I'm looking for a correction towards this area over here. Between 103.5 and 104.5, that's upward sloping and slightly. If it breaks down from there, then I think that we have a trend change and it's over. If that's happening, obviously that's going to be really good for Bitcoin and crypto. This is a different angle, same chart, looking at the DXY. We saw the breakout, nothing more than a retest right now. So if we were to see that sell impulse come down, we talked about 103 into 104.5. We could come, this is more neutral. If we break this lower line though, if we break the 104.5, at that 103.5, sorry, at that point, this would be where the trend change is confirmed on the dollar. We got bum 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 bum. What kind of meme is that? It's not in the video. Jake, you're in the wrong. What kind of meme is that? No, Jordan, it's meme. It's meme. You got to get focused. We got to get focused here. Look at the 10-year. So we're tracking it. I said it's through like this again. Fed cuts. We're all of a sudden selling bonds over here, closing out the position, and wondering when we see the reversion back up. It's too soon for me to even take a look at that, but we have to at least. I'm connecting the top two, not the bottom over here. I'm connecting the top two. That would have to be where, at that point, we just have to get back on the right side and stay on the right side. So that's added in right now. CTM positioning, we're looking at the new entry on TQQQ. I mean, it's just the new entry over here, 1%. FNGU continues to hold 22% into profit. And then we're looking at Tesla on the bottom, 21% into profit. We talked about those periods in the beginning on the first slide we looked at, where you see equity markets go into correction. There's a major difference between CTM, buy side only on the equity markets. During the bear of 2022, you're out of the market, except for one trade, simply protecting and conserving all of your capital throughout that. Most people I know, they were upset that they saw their retirement accounts go down into significant drawdown the whole year. And they said, why didn't anyone tell me ahead of time? Why didn't anyone tell? And then they have to ride that drawdown out until they get back to break even and then continue upwards. We're looking at the reverse repo at its lowest level in 3 years, down to 135. All of a sudden, Janet's not bidding. She's not putting up new issuances. That's supportive of risk. I guess her man didn't get, or her woman didn't get the election. She's backed off. We'll have to continue to watch what happens over here. But after Powell cuts, expectations are on the 18th, we're seeing a 72% chance now that we will see another cut. There's speculation out there that actually under Trump, these cuts are going to come in much more aggressively. Most people think the opposite, but probably Jay Powell wants to be a little bit, buddy with the man in charge, make sure he gets to keep his job and is willing to play ball. If that were to happen and we see further rate cuts, we're going to see this drained very quickly. That brings out, it doesn't mean that like crisis imminent, but it does mean that we're much more in a situation where we could see the fragile financial system in one way or another start to tweak. I say tweak and not break because if it does, very quickly, what is going to happen? The Fed is going to stop QT. And when they stop QT, likely the balance sheet begins going the other way. That's incredibly conducive for risk. We are so far from when the US begins to run the printers again. And it's when they run the printers that the bull of all bulls really begins to run. But they are doing their best to continue to prolong the inevitable when they have to print again. And what they're looking to do is extend the cycle out. So they're going to do everything they can to be conducive for risk. It's why I believe that next year and the year after, we're going to be riding a big wave. And it could, now I don't know, regardless of my own belief, I'm going to do, as I pointed out, use the technicals so that we do our best to stay on the right side of the market. Before we get off today's session, let's take a quick look at what's going on here with Bitcoin. Bitcoin unchanged on the day, trading at $95,757. Retail continues to be on the bid. This is public company. The Bitcoin Well is taking a play from the Sailor Handbook, acquiring 7.5 Bitcoin for $137,000. No, but they are issuing a convertible debt note from the Sailor Playbook for $2 million in order to buy Bitcoin. And that is the retail of this cycle. And the retail of this cycle continues to fall like dominoes. I'm waiting for Zuck to get on the bid. Zuckerberg is going to be on the bid soon. We're waiting. We're watching. Look at Bitcoin over here, continuing to consolidate its gains off of its last move up, its last leg up. Very, very well. Again, nothing has changed. If we break down, I had moved this to the bottom of that wick. I don't know how it moved back, but whatever. If we break below here, then that would be suggesting that we are now in for what could be a deeper correction. Right now, though, Bitcoin looks extremely healthy. It looks like it's flagging to me, and you can see that probably just a breakout of that. That's just not nice. See that? It's messy, so I don't like it. Maybe these two is where we figured it out. I don't know. But better would be a break above. I don't know. It's not clear. It doesn't got to be clear all the time. We're looking at Bitcoin on the sidelines, roaring in the bliss at new all-time highs. Ethereum, CTMX 103A, not participating in the last Ethereum trade. That's a downer. That's a bummer. That's not what we want. We want to be hitting all the time. Cardano holding open trade 225%. Solana also not hitting and on the sideline. That's probably like out of the last 2 years, in my opinion. I'm not talking about like mishaps with Solana data feed. This is probably the one instance that I've seen where I feel like we dropped the ball and we could do better. So we have to do better. Thanks for being here. Make sure you're subbed. If you're not, hit the bell, and we love to be here. We're looking here at Bitcoin bull market run, continuing to run into profit, 48% into profit. Average trade on the Bitcoin bull run is 64%. So we're right around what the average trade is. But the larger trades, let's look, 124%. Look at all these losses in a row. The win rate on this puppy is only like 20%, 500%, but it's like a 400 to 1 risk to reward. 145, 85, 853, and 46. I hope we're just getting started. We never know, which is why we don't guess. If we do get that breakout, if we are flagging and break out, we will be back on the buy side very quickly. Here's Ethereum dropping the ball. CTM 2.0 running since the summer, this edition running through the summer of 2022. Almost 2.5 years now, capturing that beautiful, beautiful trade. We got to do better. There's no adjustments, though. The only adjustment is it's been over a year. We're getting ready. We're working on V3. So we had CTM 2.0. Built on top of that is CTMX. And built on top of that, it's just basically money management features. added to CTMX. So, I mean, this trade is just not captured. It's just, I mean, I guess I could say it's individual, just another trade, but I wish it were captured. Solana, and don't forget, I mean, that's Cardano obviously holding the open position. And on Solana, right, this trade was not taken at all since then. And we talked about many people removing the ST2. That's kind of the default now. It's this trade was we missed the trade. The ST2 just keeping us out of this volatility. The drawdown is slightly increased with the removal. You could see from 13% to 16%. You can't argue with the gains though, right? The percent profitable with the ST2 is 76%, unheard of for CTM modeling, way too high. This is more within the means. Average is like 45% profitable. All right, everyone. Oh, since we're talking about this, and tomorrow we'll be talking a lot more about altcoins. I feel like these are such old models on CTM 2.0, right? And Ethereum, Bitcoin here. So, I mean, Ethereum just hasn't done anything in a while. So it's running in drawdown. That will change. Obviously, once Ethereum begins running, maybe this current trade is the one. Cardano here with this open trade of 86%. I mean, these are very, very, very old models. Doge has been pretty strong. And this is gold versus Bitcoin. I'm thinking that this has been years, 2 years since we've even looked at this stuff, that we should revert back and we should be looking at some crosses. How is Doge outperforming Bitcoin for years now? We have to look at maybe incorporating more Bitcoin bull runs type modeling into these cross pairs and see if that offers us anything of value. Something for us to take a look at as we go forward. Head and shoulders on Sol. I hear people talking about head and shoulders on Sol. Let's take a look at it and see what we're going. So, if so, I mean, left shoulder, head, right shoulder. If so, it's already broken down. The target is nothing. The target on that is roughly like from the head down to the shoulder, 16%. 16% take us right back into not like even above this last bit of what was resistance, right? Probably in this area over here. Maybe. If you're doing that and if you're playing that, the next thing that I'd want to do, and you remember what we just showed you on how to get through the chop on ARK, the other thing that you're doing is this. And if you're short here, this is when that trade's invalidated. And then if that's invalidated, you come back off the low and you continue the dance. My opinions. Everyone, great session. If you enjoyed it on your way out, please do hit the thumbs up. Have a beautiful day, everyone. God bless you. I'll see you all tomorrow.